right, so credit card debt is at an all-time high. Awesome. Yay, great news. No, not good news at all. And actually, it's even worse than most people realize. We're going to go into that and also some things you can do to protect yourself because things are pretty bad right now. I'm going to show you some charts and some data that will hopefully help you understand what's going on right now and how we need to start preparing for what's likely coming. So let's look into these articles. And the first one's from NBC News, and this is from June or July 2023. And they say credit card balances jump and are above 1 trillion for the first time. Absolutely awesome. This one is from New York Times. This is August 18th of 2023, and they say credit card balances hit new peak. Debt rose to more than 1 trillion in the second quarter, a report found, a sign of financial strain for some, obviously, even before student loan payments resume. So what they're talking about there is that student loan payments were put on a 3-year hold. They're going to be resuming payments for those in October of 2023. So not only are people in more debt than ever, with credit cards hitting all-time highs, but now they have more payments coming for some of those people with those student loan payments resuming. But I believe that's just the smallest of our issues we have coming, and we'll go into that in just a little bit. So let's just briefly look into this article. They just say American credit card balances rose briskly in the second quarter, hitting a sobering milestone of more than 1 trillion, and that was reported by the Federal Reserve Bank of New York. If we scroll down here, they say despite the higher prices and rising interest rates as a result of the Federal Reserve's battle to tame inflation, there is little evidence, in air quotes, so far of widespread financial distress among consumers who have remained resilient. And that was what the Fed researcher said. Of course, they would say that, right? The Fed wants everyone to think everything is fine and dandy and keep things calm. They don't want people to know what's really going on. And then the rest of this article just talks mostly about what you can do to, fix your credit card debt and how to put a plan in place to pay it and all that type of stuff. So we're not going to go into that. I want to start going into some graphs here that'll kind of show you what's going on here. So let's first just look at interest rates, right? So commercial bank interest rate on credit card plans, all accounts, and we see that we're at record levels for that at 20.68% in May of 2023. We see this graph going all the way back to 94. We've never been at a level like this before. Actually, the last highest one I could find was around 16%. We're all the way up to 20.68, which is pretty darn high, okay? The other thing is not only that, but we're changing at a higher rate than we've ever changed before, right? So this shows like the rate of change as far as those interest rates on credit cards. And you see from February 22, we were at -1 to February 23, we were at 38. Okay, so that's a 39% change. The next fastest increase I could find was all the way back in 09, where we went from -12 to about 15, right, which is about a 27% change. Well, this is about 1.5 times faster of a change that happened even back there. Okay, so also changing at an alarming rate. If we look at the delinquency rate on credit card loans, okay, and this is percentage change from a year ago as well. What a delinquency is, by the way, is when a borrower has not paid on his credit card for 90 days. We see that is also increasing at an alarming rate, faster than has ever happened before, as we can see from this data here. And this one went from -25 up to 45, which is what? That is a 70% change, right? Yeah, 70% change. The next closest one was back in 94. We went from -26 to about 18, which is about a 44% change, 46 if you want to count this one right here, right? So about 45% change compared to a 70% change. Again, this is more than 1.5 times faster than what's ever happened before as far as change goes. Not a good thing. We can also look at inflation data, and some people may argue that, inflation's going down since 2022, where we're seeing rate, we don't see those numbers yet, but inflation numbers are easily manipulated. And also, you could argue that you don't really feel the effects of inflation until a little later, right? And you can see that in this graph here. As inflation builds, people pile on the credit card debt, and as they pile on credit card debt, eventually they're putting more money into their credit card, less money into the economy, and then bad things happen when that happens, right? As consumers are spending less money on consuming, well, businesses spend less, and it's just a whole vicious cycle of bad things for the economy, and typically a recession follows. And you see that, right? Inflation goes up, people start feeling it, it goes down, but recession hits, it goes up, people load up those credit cards, eventually less money going to the economy, recession hits, right? Same thing here, goes up, recession hits, even on the way down here, goes up, recession hits, goes up, recession hits, goes up, recession hits, going up big time here, likely a recession is going to hit, right? So even with the inflation argument, it's going down, again, easily manipulated, and also you typically won't feel the effects till later on. And you can look at other things going on, right? So if you look at household net worth level, we've dropped at an alarming rate from 2021 to 2022, and typically what's happened in history following that is not good, right? So you have a little drop here, you got a recession, you got a little bigger drop here, you got a recession, you got a big drop here, you got a big recession, and we got a big drop here, likely what's going to happen is a big recession. And actually, this drop from here to here was about a 12% change. This drop from here to here is a 17% change. So again, it's a bigger change than what happened before right here, before the Great Recession or the Great Economic Crisis of 2028. You can also look at the retirement asset change. You see here, the retirement asset change is going down way more than it ever has before. Well, maybe close to like 2008, but even more so than 2008. 2008 was somewhat close, but this is even bigger than '08. And this is basically, people dipping into the retirement savings to pay for other things because they can't afford things. And you see a huge change here. And what do you see before from history? You see a change here going down, recession. Change here going down, recession. Big change down, big recession. Bigger change down, we could have a bigger recession. And there's an even bigger picture here, okay? If you take a look at the historical debt of our country going all the way back to 1790, there's something really alarming here. And most people don't understand why I'm such a big advocate of precious metals. This is why I'm an advocate of precious metals, because when you have a currency that is backed by gold or precious metals or any commodity really, it keeps things in check. Okay, when that goes away, things blow up and bad things happen. But the good news is that after that happens throughout history, what happened is there's a great wealth transfer, often to people who are holding the right asset. And to me, I believe that is precious metals. So let's just go into this. And I want to show you evidence that precious metals was the great container of the economy until we got rid of it. So just to give you a summary so we don't go too far off topic. In 1913, the Federal Reserve was established. Okay, at that time, we still were on the gold standard. In 1944, Bretton Woods was established, was basically where they had gold at a set price of $35 an ounce. It was backed by the dollar, and this was kind of used worldwide. In 1971, Bretton Woods was ended, and one of the reasons there was, some increase in debt here is because there was no reserve ratio set in Bretton Woods, right? So in Bretton Woods, there was no reserve ratio set where the U.S. had to have a certain amount of gold backing the dollars they were spending, right? So by 1971, what happened was people realized this, they started asking for their gold back, and the U.S. was like, uh-oh, well, we printed all this money. By the time 71 hit, they had gotten rid of 50% of their gold, and they still had 12 times more dollars than they had gold to pay people who would possibly want their gold. So Nixon took us off the gold standard. He basically said, this isn't happening anymore. He took us off. And the whole world actually went to a fiat currency. This means that there was no longer anything backing the currencies of the world. What happened since then? A major increase of debt. Why? Because we have nothing leveling out our currency, right? There's nothing keeping it in check. When gold was taken away as a backing of the currency, well, we went out of control, and we're just going more and more out of control. We're increasing our debt at an exponential rate. Evidence of this, from 2019 to late 2022, less than 4-year period, we had $8 trillion in debt. Okay, we went $8 trillion more dollars in debt. It took us from 1790 all the way to 2005 to accumulate $8 trillion in debt. How many years is that? That is 215 years it took us to accumulate $8 trillion in debt. We did that in the last 4 years, less than 4 years. Again, what this means, we're increasing our debt at an exponential rate. This is not a good thing, okay? And eventually, we can look at history. I could go deeper in this. What happens in history is the system breaks, and there's a big wealth transfer, and the rest, it's in history, right? It happened with the Athenians, it happened with the Romans, it's happened time and time again, where people start on a gold standard, it levels the economy, they slowly go away from that gold standard, their debt increases more and more, they go off the gold standard, the debt goes through the roof, and the whole system breaks, right? The thing is, when the system breaks, the wealth isn't lost, it's simply transferred. And I believe the people who are going to be the big issuers of that transfer is people that are holding precious metals, or at least that's going to be part of who's going to be holding it. Of course, we got, all the digital currency stuff coming into play here, but I believe precious metals are going to have a huge increase here at some point or another. It could be tomorrow, it could be a year from now, it could be a few years from now. It just depends on how much longer the Fed can keep up this game of money printing and sending our debt through the roof. But eventually the system breaks. It's just not a system that can keep working. Also, there's news of that BRICS is meeting to possibly form a digital currency that is going to be partially gold, either fully or partially gold backed, and that could be a big thing for precious metals as well. So although these credit card things are a huge issue, it's just a part of the bigger issue, which is our debt is increasing at an exponential rate, and the system is going to break eventually, and there's no way to repay this debt. Proof of that is if you look at our M2, which is our total money supply, is at about 25 trillion, whereas our debt is about 95 trillion. we have more debt than we can even pay off. It's almost impossible to do this, virtually impossible to pay off the amount of debt we have. And what's even scarier is our money supply is increasing at about a 15% rate, about a line like this, whereas our debt is increasing at about a 45% rate and growing, which means our debt and our money is just getting further and further away from each other. Our debt is being more and more, as that barrier between the two is just growing. Our debt's being way higher than the money supply we have is just growing more and more. So definitely some crazy times right now. I definitely also recommend you start educating yourself. If you are ready to start talking to a company, I've been in this industry for a long time, over 15 years now. I've been in the precious metals industry. I know all the top companies. And if you wanted to at least start talking to them about your options, you can go to investingingold.com/quiz. And depending on your situation, we'll hook you up with the best company we recommend to help you along. Again, they can send you, all of them have these free kits where they help you educate you on how it works and, all the questions you need to know. Even if you don't invest, I recommend you at least do that and start getting educated. Or if you don't want to go into precious metals, educate yourself on what's going on in the economy and figure out how you want to fight it, because there's some really big things coming down the road. So I hope you guys enjoyed this video. I'll see y'all in the next one.